Hello, my name's Craig Earlham, Senior Market Analyst at Oanda, and today we're going to talk about cable, the pound versus the US dollar. Now, you may be thinking that this isn't the most necessarily interesting time for this currency pair. Brexit is on hold. We've got the 6-month extension. Parliament in the UK is in recess for Easter, so we're not getting the same kind of Brexit news flow out of the UK. And the US is very much set out its stall now from a Federal Reserve perspective. No interest rate hikes this year unless something significantly changes, and only one next year. So given the fact we've, for the first time in a long time, we have a certain amount of clarity on both sides of this equation, why are we now seeing movement? And the simple fact of this is that we're seeing movement because of what's happened in Brexit. This extension, it seems, while it has kicked the can down the road and in many ways not removed the cloud of uncertainty surrounding it, in kicking it that far down the road, it does remove the near-term pressures that are associated with this currency pair. And what it means is for the next 6 months or so, we do have some form of clarity. But what it also means is that we're potentially now seeing some profit taking in the pound, because everything that is currently now happened and in the very near future is likely to happen is now fully priced in. So what we've seen is since the extension was agreed, we're seeing downside pressure building on this currency, and now we're seeing it trade back at those 130 levels. You remember now for the last couple of months that this currency pair has traded within this 130 to 133 trading range, and every time we've had this kind of good news, we've been moving back towards the 133s when it's looked possible that we could see a deal agreed that gets through Parliament. And then to the downside, when the probability of no deal, albeit in my view false probability, but probability of a no deal is increased, then we've come back towards the 130s. Well, now it looks like that 130 is coming under pressure purely on the back of some profit taking. Now, we've seen the lower highs building, so from a purely technical standpoint, those are bearish pressures. While the 130 is held on a number of occasions when tested, what we can often see and what the textbooks will tell us is that because we've got those lower highs building, that 130 remains very much at risk. We're seeing this consolidation into a major support. Should that give way, then that could be a catalyst for another move lower. We could potentially see some stops having been built up below this level, which could exacerbate the move to the downside. So where comes into focus then? Well, for one, I don't think we're going to see a massive move to the downside, because Brexit is still the main element of uncertainty for this currency pair, and it is still ongoing. And this is not a no-deal move. So in terms of to the downside, the level that really stands out for me here as the next major support level, the next major test for this pair, is that 128. That's the most recent low. It's also a historical level of support and resistance, and therefore for me it's a logical potential support zone if we do see a break below 130. Of course, this is not a foregone conclusion, and the pair could still rebound higher. The textbooks give us what can often happen in these situations, but nothing is guaranteed as always in trading. So in terms of to the upside, what I'm looking for is for one of those previous highs to be taking out, the most recent previous high. So if we can move up towards the kind of 129 type levels, the 131 type, 131, 132s, then that would suggest that potentially this is a false signal. We could be potentially remaining range bound, and we could see the 133s come under pressure, and that again could potentially signal continued range bound trading for the near term. But right now, very much, we are looking at this chart and it is still looking a little bit soft. And while we are seeing a little bit of dollar strength, like we are seeing, for example, today, that again is going to apply further pressure to that 130 level. And it's a case of can the cable bulls continue to hold during this sustained pressure? I think that's going to be very interesting to see. But from my perspective, 130 remains at risk at this moment in time, and 128 remains a very notable support zone beneath this.